solid earnings report post-market. It came from $60, rallied up into this balance area here. And obviously the cats are opening at this stage. So that news is only filtering through to the broader masses that we had a good earnings report. So that's going to put a big surge into the stock at this price, isn't it? It's going to put a big surge into the stock at this price. And when we look at this trade, we had to be patient because it traded down initially. And obviously when it trades down initially, we just have to wait for 60 seconds until it trades back up. We have our entry price set up in price levels. The price opened at this level here at $83.50. We waited until it turned back around, came back up through $83.50. We buy into the trade there. And that's all she wrote. It goes from $83.50 up to $84.70. The money's in the bank account. And we're finished. Finito. And we can see where the bracket trade is. We can see where the first measure took us to. We see where the market structure is almost perfect. So when you're looking at that from market structural point of view, you can see where the directional move should come from and to. There's the bottom edge price. There's the market structure. There's the buyers coming in off the halfback trade, as you would expect. There's the buyers coming in off the halfback trade there. And then obviously we can see the perfect market structure because there's the first profit takers for the prop right there. And you can see where the target price was for that first move. And it was literally to the tick. Literally to the tick, guys. Couldn't make it up. Tweeted in advance for you. Executed on the right-hand edge of the charts. 25.50 pullback through to the measure. Prop stops, halfback trade. Through to target price, 103.50s. And that's brilliant. That's brilliant. Crazy, right? Andy, there's two ways, absolutely, there's two ways of trading, either on a pullback to the 25 or to the first big liquidity. And the second way, of course, is to buy on the MoMo when if it doesn't pull back to a liquidity level and it doesn't stick, then we start buying if it goes back through the opening price. If it goes back through the opening price, we start bidding back into that on the stock. And this was the first one that really gave us a good clean rejection of that price. And we started to bid into that and we got an absolutely ballistically good response. Great trade. Well done, lads. Well done, lads. Well done, laddies. Top edge gold, Paul. Top edge gold again. 25 this time. Mein Gott. Got to be crazy, right? 25. Big liquidity surge. Big old Voltic. Reeve would have been happy with this one. Look at the Voltic coming in there, guys. See the I keep changing it to bloody pink so you can see it. Well, you can't really see it very well, but there is a big yellow dot right there. So there is a big Voltic surge there with that big absorption print. And leaning against that or leaning against this at 24s, it's just traded down to 21s. It's a good trade and a good, solid outcome, guys. Great trade. Lovely again if you've taken the short. As I said, the problem you've got is there's too much business in here now, guys. There's too much short in here. And it's putting you under pressure because, as I mentioned, every time you get a short, you take your monies on any level too. And that's caused because there's so much short in this place. You take some monies off the trade. You make some money on the swing. You don't hang about. Because if that short-term value changes, there's so many people that are now short off these highs that there's going to be a mass exodus to the top side, Paul. So be careful with these shorts. Get your money. Put it in your bank account. I know the value looks so sensational. Just get your money in your bank account and watch for it because it should drop. But there's always going to be buyers coming into these bottom levels because of the amount of short business that's now in this area. The inventory is enormous. Remember, every time you see a seller coming in, you see a seller coming in there, it puts a buyer in here, right? Puts a buyer in here. That buy never happened. So when you see a seller coming in here, there's not one buyer here. There's two buyers here. So when the price comes up and a seller comes in here, you can see that below this level, it's not two buyers. It's three buyers that's now below that level. When this seller comes in, then obviously there's going to be this kind of response there. Do you see it? You see it? That's why this happens. This is why these things develop, right? And then obviously when we get another seller, you're starting to think to yourself, what the hell is happening here? Look, this is getting bigger and bigger and bigger and bigger every time we get that seller coming in at the top print. It's getting harder and harder and harder to make money on the short trade because everybody's short. If everybody's short, it's tough. Who else is left to sell it if we don't start sweeping some stops? Think about it, Paul. Imagine you're a 5-lot seller. How many contracts have you got left? None, right? So if you're a 5-lot seller and you sold on that first one, and then you sold on the second, and then you sold on the third and the fourth and then the fifth, you've not got any business left. You've not got any sales left. So you're sitting watching, waiting, hoping. But how many buys have you got to get rid of? How many sales have you got to get rid of with a buy order? 5. You've got 5 buy orders resting, waiting to try and say, what the hell, right? And either they're going to come out into these levels here or they're going to come out at this price here, right? So that's the problem with these types of things. If that short-term value starts to turn around, you've got this big arrow sitting right above this price here, haven't you? The bigger the selling, the bigger the buying that's due to come into the market, either at bottom edges or at top edges. So be very, very cautious, guys.